Good morning, friends, family, fellow futures, and Forex traders. It's time for the market forecast. Thursday, June the 17th. I'm John Hoagland here with Lacey. As always, we thank you for joining us this morning. As always, we're going to be looking to find good, accurate context in the markets, always practicing good risk management, and, of course, patience. Our 7:30 numbers this morning, jobless claims and Philly Fed. Jobless claims higher for the first time since April. Philly Fed a little bit lower than expected. 9 o'clock numbers. Of course, these are all in Central Time. Misleading indicators, and 9:30 we have the nat gas numbers due out. As always, there's going to be challenges, there's going to be risks, there's going to be losses, there's going to be wins. Let's keep those losses small and look for those bigger wins. As far as news is concerned, obviously, if you're looking at the markets, stocks took a punch yesterday, looking to continue lower today after the Fed states the rate hikes may come sooner than expected. They're talking about 2023. So we think we're now going to be waiting for information from the Jackson Hole meet up in August before we're really going to see any real rhetoric about what they're planning on doing in the future years here as far as policy is concerned. The U.S. dollar caught a nice bid, now up near 92. Rates on the 10-year lurched near 1.6% last night. They've come off a little bit since then. Crude prices have come off highs on a kind of a 1-2 punch yesterday. The EIA, there was an additional 7.3 million barrels in crude stock, and then the Fed and the dollar strength, all of those things, kind of taking the wind off the upside momentum in crude, at least for the time being. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel. Lacey's over here saying hello to everybody. And taking a quick look into the VIX, the dollar index, and the 10-year yield. VIX is up about 2% this morning, as would be expected. 1856 last time I looked. Dollar index, nice pop to the upside yesterday, up at 91.76, and the 10-year yield down a little bit actually this morning, but pretty good pop to the upside yesterday, 1.558% last time I checked. As always, got to say hello to everybody. Brian, first in the room, you win the prize. Nico, good morning. Murph, yeah, the weather is beautiful. I hope it's like this tomorrow as well and over the weekend. James, good morning. Theo, good morning. Jay Gilmo, Vince, Tanya, good morning. My brother Rick, love you. My brother Richie, Laura, Torres, Steve M., Tommy Nocito, there's a new name. Welcome to the market forecast. If this is your first time here, and Lacey moosing me over here now, welcome. And Jorg, good to see you. The chef, Mr. Magianes, is here. Tone, Vici, Caesar, Tim G, Jason, Colin, Mr. Shine's Mystery Channel. Morning, crazy day yesterday. I didn't even lose my account. Good. You know, it's better to sit back and watch than lose that account. That's the idea here. Consistency and sustainability. Sustain that account for a long time. You'll get better and better learning about the markets and yourselves. All right. Yeah, Tim, the dynamic circuit breakers are very confusing because the circuit breakers change at different times. I'm not sure if we've seen the kind of volatility that requires you to remain flat, close to the 2% dynamic circuit breaker. It is a something that we all kind of struggle with in trading, especially if we we don't want to get stuck in a limit move. I'll have to look at those, Tim. I think we should probably do a some sort of content and try and clear that up a little bit. Because they're dynamic circuit breakers and they change on the fly, it's extremely difficult to let everybody know when and where they need to be flat. Not sure if we're at the kind of volatility that's going to be required. Something we working on clarifying. Tim G, thank you for the idea and for the feedback on that. PK, good morning. Greg, Zorain, George, Rob T, Dr. VJ, Deanna, Jerry is awake. I hope John is too. Lemur, Prophet Eon, good morning. Ed Nelson, good morning. John S, morning. Beautiful day here on the East Coast. Good. I guess we're lucky because I guess out on the West Coast and in the desert of Arizona and California, they're really hot out there. Possibly some record-setting highs as far as temperatures are out there in the next couple of days. Tic Tac. Tactic. Good to see you again. Joe West. Carol. All right, a couple of new names there. If this is your first trip to the market forecast, as always, we appreciate you being here. Our goal is to, help you provide some sort of context and some sort of ideas for some interesting spots in the markets, and we've certainly found a couple today. So I'm going to move on to the daily and crude. I'm going to put my little glasses on, and we're going to go take a look. All right, so here's the daily. This is the last day that I'm going to be trading July. You're okay in July or August. Hey, what happened? This is a new one. All right, I've lost the charts, but it's saying that the charts are streaming. Let's try this again. I'm going to pop back in. Hello. And there's the charts. I'm just going to pop them in like this. And then they go away. I can see them on my production software. You know what? I'm going to do something here, and I've got to try and get this thing going. So I see it. All right. And initializing and okay. Now it looks like a little bit more stable. Let's take a look. All right, now we got them. All right, thank goodness. Here is the daily and crude. Obviously, we've known that the market is continuing to its upside. We've been wondering when we're going to get a little bit of a relief break here. This is the last day I'll be trading July. I'll be trading the August contract tomorrow. The volume is pretty much even on both, so I've decided I'm just going to stay in July. Today, August, we'll be looking at tomorrow. Another boost in crude stocks and, some change in perhaps policy. And now we've started to see a little bit of a relief break here, at least to the downside for a little bit yesterday. Today is switch day. We're still in rollover. It's looking more to me like we're going to start to remain a little bit range bound in this area than go directional. We added 10,000 in open interest on the downside yesterday, but again, that can be blurred by rollover. Prices last night kind of coming down and retesting the breakout level that created this up move. What is this on Tuesday? Monday we closed at the weekly kickoff level and last week's high. Yet Tuesday we broke out. Yesterday we failed to continue with new news coming into the marketplace. Now it looks to me like we're likely going to just kind of range in this area. Again, being rollover, our longer time frame traders aren't interested in becoming directional. They'd rather get their cheap rollover done. Here's the 30-minute chart. Okay, we've got weekly kickoff high here at 71.20. We broke out. We've been holding roller coaster day yesterday. I mean, We opened and we broke and we rejected value from the previous day and we popped and we took out the overnight high and we failed on that. And then the news came out and pow. So, the 930 number with the boost in crude stocks brought the market higher. Then as the day went on, it just kind of fell apart. I'm perhaps expecting something from the FOMC meeting. Settlement is here, 72.15. No real overnight position. I'm going to be thinking about trying to stay patient. I'm really not, like I said, expecting much in directional activity in this market. So I'll be looking at opportunities down here near our overnight low, near weekly kickoff low, near last week's high. And if we do continue to trade into value and find some time to spend in there, we're going to look to see if we can see this market continue up to value area high. But again, I'm not looking at a big move here today. That said, watch it make a liar out of me. All right. The opening range may well be the low of the session, basically opening with a gap, closing the gap immediately. Be patient. Look for opportunities at your overnight extremes, perhaps. Don't try not to do anything right in the middle here. Okay, the S&Ps, the Fed has put a new chill into the markets. We have new information. We are at risk of perhaps changing market state in the S&Ps. To me, that's going to mean an acceptance below weekly kickoff low here, which is 41.84. Last night we traded to 41.83. Sellers backed off. Buyers came in. We're not even open in the regular trading hour session. Remember, it's quadruple witching tomorrow, expiration tomorrow. We did add 8,600 in open interest on a down move coming into expiration. Looks like there's going to be somewhere around 450,000 contracts that are going to expire and settle in cash tomorrow. We'll take a look at that as time goes on. So we got a really good look last night. Of course, I was sleeping and did not get prepared for this opportunity last night. Look at how this market just went back and rechecked a naked point of control from June 4th. We had a trader that I work with in coaching was talking to yesterday. He says, I like that area. He says, a naked point of control down there. If this thing really gets some legs down there, I'm gonna be looking for an execution down there. Well, the market opened, broke, 1 o'clock came, traded right to that naked volume point of control from the 4th to the tick. It's amazing how visual these markets are. Overnight shorts, settlements 42.13. We've spent all night down below that, but I'm really kind of looking at the fact that we've got the market opening in range and in value. Look at how target rich this area is down here. We've got weekly kickoff low. We've got our overnight low from last night. We've got the low from yesterday, which was a naked point of control, hit it to the tick. We've got value low here, and we've got last week's low right here. There's fish here somewhere. Are they going to be an opportunity to buy a weakness and have it recover back to the upside, or are we going to reject value from yesterday and look for opportunities for continuation to the downside? Keep your ears and eyes on the news. If there are any Fed speakers today, we'll be watching what they say. I'm pretty sure they're going to be pretty careful about anything that they talk about for the time being. They don't want to put too much of a scare into these markets. So market's going to open in range and in value. I'm going to try and stay patient, wait for better trade locations as the day goes on. The NASDAQ. Here's the daily. We finally got to put in a new all-time high. Don't forget, in the NASDAQ and the S&Ps, the all-time high was in the overnight session. Markets don't like to leave that. The NASDAQ is actually holding up as better. It was a real lagger on the way up, and now it's a laggard on the way down. There is lots more space and lots more opportunity inside last week's range and between weekly kickoff high and low before we're going to start to change any market states. Remember, it's expiration tomorrow. So we're going to be kind of holding in this market state as long as we can hold above weekly kickoff low 30. The reason I think that the market has held up a little bit better than the S&Ps is because it's been a very organized move to the upside here in the NASDAQ. By organized, I mean here's the nearest naked point of control, all the way the other side of weekly kickoff. Above that, every point of control has been revisited in the previous session. Revisited. That's organized. That's a strength signaler, if you will. I'm looking for the right word there. So it makes sense to me that the NASDAQ has not even tested weekly kickoff low yet because of the organization of the recent activity. There's a lot fewer visuals down below. Yeah, we've got, last week's low, we've got weekly kickoff low. But as far as, profile technical information, we've got a long way to go before we're going to be able to come down and check this naked point of control. If we do that, then we're at risk of a market state change to the downside. We're not at risk of that right now. Here's the situation for today. Overnight shorts, maybe. Settlement, 13,972.75, right up here. Put that on your charts. It can be helpful for us. So again, we're opening, no gap, maybe some overnight shorts still in the marketplace. It's going to be another test of, are we going to accept inside value? If so, we've got plenty of visual targets up here. We've got settlement. We've got last week's, I think, whatever high or low what this was. I think it was the low. And then we've got a point of control above there. Down below, there is space. There's also visual opportunities in last week's low. This was last week's high. This is last week's low and weekly kickoff low. But we've got to reject value here first. The gold. Okay. Big breakout. Big break to the downside. Big change in market state. Big scary market. The volume was great. Was good yesterday. Not great. We only added 1,500 in open interest to the downside. Now that's an indication of new selling coming into the market, but I don't think it's all that great. Today we traded right to a previous weekly kickoff level, which was 1777. 1776.20 is our current low. Let me take a look and see what I've got here. Yeah, and then an open interest is and volume on a breakout type of market state changing day wasn't all that tremendous. So look at where we are. Okay, a little chunky here, but this was weekly kickoff low. It was supportive for the better part of the week. Once the number came out and we broke out and built some volume down below that, it was game on to the downside. Now we're up against a support level that goes pretty far back. I didn't even go back and see what I was looking at when I picked this level. All I know is it was important enough to leave on the chart. Now we've got opportunity down here. We're seeing momentum perhaps falling off to the downside. This looks like an interesting spot to go throw a lure in the water and see if we can find a fish there. Look at what happened. Here's settlement all the way up here. We did put in the late spike to the downside. We've opened below the late spike. There's no doubt that this market is accepting lower prices for the time being. The opening range today was absolutely huge. It was an $8 opening range. That's an $8 1 minute opening range. The high of that is 1787.30. 1787.30 right there. All right? Keep an eye on that level, because if we can't hold the high of the opening range, which we did take it out by a couple of ticks, if we reaccept above that opening range, all of these short time frame shorts might get a little bit nervous. And if that's the case, we may see a situation like we saw over here. This was Monday into Tuesday, I think. No, this was Friday into Monday. This was settlement here. All of these overnight shorts were looking for continuation. They didn't get it. We had a big pop to the upside worth about $2,000 a contract. What are we doing today? We're at an inflection level. If we can't get and accept below this level, all of these shorts might start to get a little bit nervous. That was a big down day yesterday. So as far as daytime frame opportunities, we're looking to see if we can hold this level. If we can, pretty good upside potential. Not a market state changing upside potential. I don't expect the market to come back and close the gap. If it does, hey, that's so be it. Hey, enough of that. So there's fish down here. Direction unknown. Hi, Lise. Let's take a look now at the euro. Now, this is kind of a tough spot. I mean, the market is obviously ballistic to the downside. It's going to be very difficult to try and get into this move. So I think there's going to be a lot of temptation to try and pick a bottom. Try and pick a bottom in a market that's moving in this direction with this kind of momentum is probably a little ill-advised. We've already got some pretty high volume, pretty decent volume yesterday on the way down. We lost 131,000 in open interest yesterday because it was expiration. That's how many contracts are going to settle in cash. So now we're going to get more clear information as far as volume and open interest next week for our currencies and for our equities, but not so much for the crude oil until later on in the week. Anyways, now, let's take a look at the 30. There's something on here I think we should take a look at. So here's the big move down yesterday. Settlement 120.39. I'm getting a little long-winded here, but there's something kind of important I want to show you here. The market has moved considerably lower, especially during the European session. This is the cumulative delta. So what this is indicating is while price is moving lower, the aggressors are the buyers. So there's a lot of orders being placed on the offer when cumulative delta rises. What does that mean? Well, we've got more aggressive buyers, but price is moving in the opposite direction. It says to me that some of our European traders, bigger, stronger European traders, have turned into sellers in the euro and or perhaps needing to adjust inventory, and they've been placing offers and moving those offers lower, getting the short time frame traders longer and longer. And if they don't adjust inventory to the upside, the overnight and weaker hands longs that are starting to accumulate in this market could actually perpetuate price lower in the direction helping out the longer time frame sellers who seem to be accumulating shorts against more aggressive short time frame buyers. Even if you don't trade the euro, check it out, watch it, check what happens here throughout the day, because it's going to be a fascinating study of how we can use cumulative delta to look for opportunities. And on to the 10-year. Well, get a little pop in rates, and here's what happens. Whisper of possible rate change in policy, and rates pop. We're kind of driven back here into an area of balance that we were in for, 2 months? Or at least a month and a half. We're back in that area. I think it's going to be a sticky area for us to get back out of without some sort of new business or new information. Here's the 30. Settlement right here, 131 and 24 seconds. We're going nowhere. We got no overnight inventory. We're right back at settlement price. And Lacey seems to be very upset about that. All I'm going to be looking for is just to avoid the middle. I'll look for possible opportunities at the overnight high or the overnight low. If we go back and we reaccept inside value from yesterday, which I don't necessarily see that happening unless we get a nice little drop in rates, which we don't see happening. I think we're going to be a little bit digestive today in the 10-year after the energy that it expended on the downside move yesterday. Lacey's a little bit upset. There's some people walking a dog out in front of the house. She's down. Stop that. Be a lady. Come here. Say hello to everybody. Come on. Hi, Lacey. You take it easy now, okay? All right. Okay. Take your deep breath. Stay humble, grateful, and creative today. It's all about context. It's all about risk and reward. Small risk, big rewards. We should probably not going to see a recap today, but I'll be back tomorrow morning for the market forecast, and it's going to be Friday. So I hope you've had a good week. I hope we've been helpful. We're looking forward to your success. Get out there and profit. Trade well today, and I'll see you tomorrow morning.